Lululemon reported fiscal year 2023 first quarter earnings results that sent the stock soaring higher. In this video, I'm going to review those figures and I'm also going to update my recommendation on Lululemon stock. Heading into these financial results, I had Lululemon stock rated as a buy. So you're going to want to tune in to see if I'm changing that recommendation after the stock price increased substantially following the earnings results. So let's get right into it. Revenue increased by 24% to $2 billion. Diluted earnings per share jumped to $2.28. That was up from $1.48 in the same quarter the prior year. The gross profit margin increased by 360 basis points to 57.5%. These are some of the best gross profit margins for any apparel company in the world. Excellent gross profit margins. Lululemon is benefiting from the economic reopening in China. Revenue grew by 60% internationally compared to 17% in North America. I will also say, from all of the companies that I follow that operate in China, Lululemon was the first one to say that they benefited from that economic reopening. All of the other companies that I follow that operate in China have been more or less saying that the economic reopening is not as strong as they thought it would be. It's not creating as much momentum as they thought. So it was surprising for me to see Lululemon say that they benefited from that reopening. Inventories, interestingly, increased by 24% to 1.6 billion at the end of Q1 compared to the same time last year. I say interestingly because inventories has been a bit of a problem industry-wide. There's too much inventory, and rivals have been offering a greater degree of discounts and promotions and incentives to bring down inventory. Lululemon surprisingly didn't do that, and they actually increased their inventory. A bit surprising, but when you have revenue that's growing by 24%, then an inventory increase by 24% isn't much of a problem because you're offsetting that but with revenue growth. That product is selling and you're getting fresher inventory. It's more of a problem when you're a company that's flat or growing more slowly and you've got inventory building up. It increases the risk of obsolescence and having to offer major discounts to get rid of the inventory. So management is forecasting second quarter revenue growth of 15% and earnings per share of $2.50. For the full year, the company is expecting revenue growth of 17% and earnings per share of $11.84. So an excellent quarter for Lululemon stock. I can understand why the stock price jumped following these earnings. And to update my recommendation, I had the stock rated as a buy. I will reiterate that recommendation. I would say the stock is still a buy because yes, the stock price increased, but that increase was justified by the improved financial performance. The company increased revenue, increased earnings per share, improved profit margins, all of which makes the company more valuable in my eyes. So it did deserve that stock price increase. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.